Time is your greatest asset in your 20s. The earlier you start, the more time your investments have to grow. It's the perfect time to start investing, even with a small amount. Small, consistent investments can lead to significant growth over time. The magic of compound interest will amaze you. Your earnings will start to generate their own earnings, creating a snowball effect. This means your money earns money, and those earnings generate even more earnings. And then that money earns even more money. It's a powerful cycle that can lead to substantial wealth over time.
You have a high tolerance for risk in your 20s. This is because you have more time to recover from any potential losses. You can afford to invest in things that might be considered a bit risky. Higher risk can lead to higher rewards. This could mean stocks or even some real estate. Diversifying your investments can also help manage risk. Don't be afraid to be aggressive. Taking calculated risks can pay off in the long run.
Start with the basics. Educate yourself about different investment options and strategies. Consider investing in stocks, bonds, and mutual funds. Each has its own risk and return profile. Stocks represent ownership in a company, offering potential for high returns. Bonds are like loans you give to the government or companies, providing more stable returns. And mutual funds are baskets of stocks or bonds, offering diversification and professional management.
Remember, investing is for the long haul. Patience and consistency are key. Don't panic if the market dips. Market fluctuations are normal and should be expected. Stay focused on your long-term goals. Regularly review and adjust your investment strategy as needed. And most importantly, start today. The sooner you begin, the more time your investments have to grow.
As you enter your midlife years, your investment strategy needs a slight shift. It's a crucial time to reassess your financial goals and make necessary adjustments. You're closer to retirement, but still have time to grow your wealth. This period is about finding the right balance between risk and reward. Balancing growth and security is key. You want to ensure your investments continue to grow while also protecting your hard-earned money.
Diversification is crucial at this stage. By spreading your investments, you reduce risk and increase potential returns. Don't put all your eggs in one basket. Diversifying helps safeguard against market volatility. Spread your investments across different asset classes like stocks, bonds, and real estate. This mix can provide stability and growth.
Maximize your retirement contributions with a 401k or IRA. These accounts are designed to help you build a secure future. These accounts offer tax advantages and help you save for retirement comfortably. Take full advantage of these benefits. Take advantage of employer matches. It's free money. Matching contributions can significantly boost your retirement savings.
Regularly rebalance your portfolio. This ensures your investments align with your evolving goals and risk tolerance. As you get closer to retirement, adjust your asset allocation. This helps manage risk and secure your financial future. Shift towards more conservative investments to protect your savings. This strategy helps preserve your capital as you approach retirement.
Congratulations, you've reached retirement. This is a significant milestone, and it's time to celebrate all your hard work and dedication. Now it's time to enjoy the fruits of your investment journey. Travel to new destinations, explore new hobbies, and relish the freedom you've earned. Your focus shifts from growing wealth to generating a steady income stream. This ensures you can maintain your lifestyle without financial stress.
Conservative investments should be your priority. These investments help protect your savings while providing a reliable income. Consider low-risk options like bonds, annuities, and dividend-paying stocks. These options are designed to offer stability and peace of mind. These provide a consistent income stream without exposing your savings to significant risk. It's about balancing security and income.
Create a retirement budget and stick to it. This helps you manage your finances effectively and avoid overspending. Estimate your expenses and ensure your investments can cover them comfortably. Factor in healthcare costs, leisure activities, and potential travel plans. Planning ahead ensures you can enjoy your retirement without financial worries.
Estate planning is essential at this stage. It ensures your assets are distributed according to your wishes. Ensure you have a will, living trust, and healthcare directives in place. These documents are crucial for protecting your legacy, and healthcare directives in place. They provide clear instructions for your loved ones. These documents protect your assets and ensure your wishes are honored. Enjoy the peace of mind that comes with knowing your future is secure. Investing might seem daunting, but it's a marathon, not a sprint. Start small, stay consistent, And remember that the best time to start was yesterday. The second best time is today. Whether you're just starting your career or enjoying your golden years, investing is crucial for financial security. Tailor your strategy to your life stage, seek professional advice when needed, and watch your money grow.